Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We've been coming to you live throughout the day from the Financial Markets Quality Conference at Georgetown University's McDonough School of Business. Joining me for this segment, we have Wagas Ahmad. He is the CEO of Benchmark at FTSE Russell, and he's going to give us an inside look into the governance panel who we'll be sitting on in the next hour. Thank you so much for joining us at Georgetown.
Thanks, Jill.
What are some of the topics that you're going to be highlighting on your panel?
Well, there are some very interesting topics that are live at the moment in the markets around governance. So, for example, the dual share class structure issue, which is fairly live. There's also quite a lot of focus on ESG issues. That's certainly a focus for investors and regulators and index providers all across the globe. From my perspective on the index provider side, FTSE Russell's really been looking at the dual share class structure issue in the last year or so. That's an area for focus for us.
Now, it seems like voting rights, that's a key issue on the panel as well. Why is that being brought up right now?
Well, there were some issues last year with the launch of the Snap IPO. There was a lot of investors in the market of all types, whether active or passive, who were raising the question to their index providers like us to try to look at that issue and decide whether or not those securities should be included in the broad market indexes like the Russell indices.
And do you think they should be?
Well, we went through a very long and involved governance process. Usually when we have these kind of issues that affect the methodology of the indices, we like to consult with the broad market, investors of all types, whether that's active or passive, large and small, from the US and around the globe. To really get their insight as to what are the issues for them with respect to investability. So we take our guidance from the index users, that's the investors in the market, not only to figure out which issues to investigate, but also how that should land and what the decisions are that we should take to adjust the index methodologies. So we had a very clear mandate from the responses to our consultation and from the one-to-one and the external advisory committees that we run, that those kind of securities should be in the indices, but they should have a very clear mandate to, over the next 5 years, to look at whether those should be included on a going forward basis. So what we've done is we've decided to, and this was something that we announced in July 2017, that new entrants to the Russell indices should have at least 5% of their shares in issue on a free float basis with voting rights. And anything that's in the index right now will have a 5-year grace period until 2022 before any action is taken on those.
Now, for ESG investing, it's been a really strong trend, a relatively newer trend. Do you think that's going to be something that's here for the long term?
Well, it seems to be. I mean, it's grown very much over the last few years in terms of interest from the investor community. I think people would characterize that as starting from small beginnings about 5 or 6 years ago. Definitely in Europe, definitely in other jurisdictions outside the US. But in the last 5 or 6 years, it's really grown. People are asking us to create indices separate to our standard market cap weighted indices, an alternate family where we have ESG factors taken into account, either in the weightings or in exclusions on a customized basis.
Okay. Thank you for joining us and sharing that insight.
Great to be here.
All right, and thank you for joining me throughout the day. I'm Jill Malandrino, global markets reporter.